Hi students, good evening to all and welcome back to my channel. And our today's topic is cash flow statement. As a part of CA Inter Advanced Accounting Revision series, we have completed few topics. And our next topic is a cash flows. From the today onwards, I will start accounting standards. So coming to this one, this is one of the important and easiest topic and one of the high scoring topic also. We may expect one question from this standard in the final exam up to around 8 marks. Okay. So without wasting the time, I will move on to the topic. So cash flow statement. So first of all, what is meant by cash here in case of cash flow statement? Generally, cash consisting of cash in hand and cash equivalent items also. Both are covered under cash. Cash equivalent items are nothing but what? So those are covered demand deposits. Demand deposits means those deposits with the bank or financial institutes like our current account. Best example is nothing but current account or savings accounts are covered. And any another deposits whose maturity period is less than the 3 months. And another one is short term or highly liquid assets. Short term and highly liquid assets, which are easily convertible into the known amount of the cash. Known amount of what? Cash. And another one having insignificant, carrying what? Insignificant risk in change in value. Insignificant risk. And the best example is what? So, investment in debentures or preferential investment in debentures, bonds, preferentials, etc. But remember, investment in equity share is not a cash equivalent item. Is not a cash equivalent item. Why? Because it is carrying a significant risk. It is carrying a significant risk. If it is having an insignificant risk, then only it is covered under cash equivalent item. Okay. So even current investments are there. Shall we consider the current investment as a cash equivalent item? So shall we current investment? So in case of current investment, shall we consider it as a cash equivalent item or not? Depending upon its maturity period. If its maturity period is less than or equal to 3 months, then consider it as cash flow statement. Otherwise, it is not a cash equivalent item. Otherwise, it is not a cash equivalent item. Depending upon its maturity period, we have to decide whether it is a cash equivalent item or not. Okay. And so, for example, if any movement is there in between, for example, cash and cash equivalent item like bank, for example, bank, cash deposited into the bank or amount withdraw from the bank. So either cash deposited or amount withdraw. Shall we consider it as a cash flows? So remember, these are not treated as cash flows. Those are not treated as cash flows. Any movement made in between cash and cash equivalent item cannot be considered as a cash flows. Cannot be treated as a cash flows. Okay. So and coming to the next point. And how to prepare the cash flow statement. And before going to the cash flow statement, so say, cash flow statement simply is nothing but the statement showing the flow of the cash during the year. Generally, we in case of cash flows, generally we are having the two flows only, either inflow of cash or outflow of the cash. In the cash book, we consider it as what receipts and outflows are treated as what payment. And it means cash flow statement simply is nothing but cash book as a yes, it is a cash book. But here we are preparing the cash book in the form of this statement by dividing all activities relating to the flow of the cash in between three items. In between three items. So Three items. And one is what? Operating activities. And another one is what? Investing activities. And another one is what? Financing activities. Operating activities, investing activities, and financing activity. Then let us discuss about the individually. And first, operating activities. Operating activity. What is which items are covered under operating activities? Generally, operating activities covers and cash flows are those activities which are relating to the day-to-day operations of the entity. Simply nothing but what? Cash flows relating to day-to-day operations of the entity, and these are relating to the mainly relating to primary revenue source of entity. Primary revenue source of entity. So whatever the day-to-day operations are there in relation to that, any activity happen, nothing but what? Cash flows, operating activity. For example, we are the furniture dealer. Then furniture sale of furniture is my primary revenue source. And in relation to that, whatever the activities happen, those are covered under what? Operating activity. And generally, which items are covered under operating activity? Simply is nothing but purchase of goods for cash, or sale of goods for cash, or any amount received from customer, or any amount paid to the customer, any amount paid to the customer, and any operating expenses paid. What are operating expenses? Like salaries, rent, printing and stationery, traveling expenses, etc. Any operating expenses paid, those are also covered under what? Operating activity. Operating expenses, if anything I paid, those are covered. And in relation to any operating income we received, like sale of goods, even bad debts recovered is also covered under what? Operating activity. So cash flows relate into the day-to-day operations of the entity, and which are relating to the primary revenue source of the entity are covered under what? Operating activity. Operating activity. And second one is investing activity. And investing activity simply is relating to the utilization of the amount. It is relating to what? Utilization. Simply is relating to what? Utilization of the amount. And those activities, so those activities relating to non-current assets like PPE and intangible assets, and investments. And what investments are covered under what? Investing activity? The activities relating to the non-current assets like PPE or intangible assets and investments are covered under what? Investing activity. And then like what? For example, purchase or sale of PPE or intangible assets or investment, or what? Investment. But remember, here investment stands for current investment or non-current investment. Generally, it covers non-current investment. Even current investments are also considered as a part of investing activity only when if its maturity period is more than 3 months. Then if maturity period of current investment is less than or equal to 3 months, that is forming part of what? Cash equivalent item, and never be considered here as a part of investing activity. Okay. So and another one, any income received like interest income received, or any dividend income received is also covered under what? Investing activity. So any activities incurred in relation to the non-current assets like PPE or intangible asset like purchase or sale of property, plant and equipment, and purchase or sale of intangible asset, purchase or sale of investment property, and purchase or sale of non-current investment, even purchase and sale of current investment if it is not covered under cash equivalent item, and any income in relation to the corresponding investing activities, all are covered under what investing activity, like interest income received or dividend income received. And remember, rental income received in case of investment property, in case of what investment property, any rental income received, that is also forming part of what investing activity. So any activities relating to the day-to-day operations of the entity are relating to the primary revenue source of the entity covered under what operating activity. And second one, any activities incurred in relation to the non-current assets like PP and intangible assets and investments are covered under what? Investing activity. I hope you understood. Okay. And next, another one is financing activity. Financing activity. Financing activities are relating to the these are relating to the capital structure of the entity. Means any activities incurred in relation to capital structure of the entity. Capital structure of the entity. Generally, capital structure consisting nothing but what mixing of the capital. What type of capital we have? Either equity share capital and preference share capital and debt is there. Debt in the sense debentures. So debt is there, nothing but what debentures and any short-term loans, etc. And these are all covered under what finance. How the amount is generated and cash flows relating to the source of generating the finance. Cash flows relating to the source of generating the finance. They're like what? So proceeds from issue of shares, either equity shares or preference shares or debentures, etc. And redemption of preference shares or redemption of debentures are covered, and buyback of equity shares are covered. Buyback of equity shares are covered, and loan taken from the bank or outsider is covered, and interest paid on loan or debentures, interest paid on loan or debentures, etc. Those are covered, and repayment of loan, if any, and dividend paid, if any, and these all are covered under what financing activity. Financing activity simply is nothing but cash flows relating to the source of finance. What are the sources of finance? Equity share capital, preference share capital, debentures, or any loans we have and debt we have. And in relation to that, whatever the cash flows are there, and those all are covered under what financing activity. Okay, these are the three acts. So cash flows are classified into three types. All activities relating to the cash are classified into three: operating, investing, and financing. Okay, and we have some special cases we have, and like for example, in case of insurance claims are there, and it means if any insurance claims received, where we have to consider if insurance claims is relating to the loss of goods or loss of PPE. Insurance claims received in relation to what? Loss of goods or loss of PPE. If it is relating to the loss of goods, consider it under what? Operating activity. If it is relating to the PP is covered, non-current asset is covered under what? Investing activity. So insurance claims relating to this is also covered under what? Investing activity. But remember, as per AS5, Net profit or loss for the period or current prior period items or changes in accounting policy. That is the standard AS5. And as per AS5, extraordinary items, if any, extraordinary items are required to be disclosed separately in the financial statements. In the financial statement. So insurance claims are received, if any, due to the in relation to loss of goods or loss of PPE due to the fire accident, and those are always covered under extraordinary items and are required to be shown separately, either even in the cash flow statement also. Okay, and another one, second special case is, for example, taxes paid. Where to consider? Taxes paid, if any, way to consider. And remember, if taxes paid is relating to the operating income, then covered under operating activity. Like best example is income tax. And if the taxes paid in relation to the investing income is covered under investing activity, any TDS deducted, on the interest received or dividend received, etc. And any it is relating to the finance income covered under what? Finance activity. Nothing but if TDS deducted by us while paying the interest, then that is also forming part of our financing activity. And remember, in exam, if nothing was stated relating to which income, then consider it as a part of operating activity. Consider it as a part of what? Operating activity. Okay. Then third one, for example, there are some situations we have like loans taken, loans given, and interest paid, interest received. And where we have to consider, generally loans loans taken is covered under what? Financing activity. If any loans we give, that is our investment and is covered under investing activity. Interest received covered under investing activity, interest paid is covered under financing activity. But certain entities are there which are doing the finance, like financing entities and others. In case of financing entities, loans taken or loans given and interest paid and interest received, and these all are covered under what? Operating activity. These all are covered under what? Operating activity. Because in case of financing entity, the taking the finance or issuing the finance is a regular course of business operation, and in relation to any cash flows we have covered under operating activity only. But coming to the others, loans taken, loans taken is covered under financing activity. Loans given is covered under investing activity. Interest paid is covered under financing activity. Interest received is covered under investing activity. Is covered under what? Investing activity. And one more important point is, for example, if any loans given to the employees, any loans given to the employees, and interest collected thereon, and is always a operating activity for any case, is always a operating activity for any case, whether it is a financing entity or whether it is a others, it is always treated as operating activity. And any advances given to the supplier and is also a what? Operating activity. Any advances given to the supplier is also covered under what? Operating activity. And another one, for example, if the dividend received, sorry, dividend paid, dividend paid, whether it is a financing activity or whether it is others, dividend paid, generally we paid dividend to whom? Equity shareholder or preference shareholder. Equity share capital is always a finance to the entity. Equity share capital is always a source of finance, and whatever the dividend we paid is always treated as a financing activity, whether it is a financing activity entity or even others also. Okay, so these are the important points, and you need to check whether it is a financing entity or others. Okay, and One more important point is, and relating to the grants, if any grants received, we cover it under AS12 generally. If any grants we received during the year, way to consider. Generally, grants received in relation to the payment of expense is covered under operating activity, and in relation to the PPE, purchase of PPE or intangible asset is covered under what? Investing activity. Is investing activity. And if the grant received in the form of a kind, in the form of kind, remember it is not a cash transaction. It is not a cash transaction. And that means generally in the form of the kind, we have two situations in AS12. If it is received at free of cost, first of all, it is not a cash transaction. If it is received at a discounted price, if it is received at a discounted price, then we can consider it as an investing activity. For example, if it is received at free of cost, it is a non-cash transaction. But if, for example, if it is at a discounted price, covered under what? Investing activity. And if any grant received promoters contribution promoters contribution is always what? Financing activity is covered under what? Financing activity. Okay. And even grant refunded, if any. So, and grant refunded is also same thing, but grant refunded is nothing but it is a extraordinary item and is also required to be disclosed separately. And in accordance with which item, based on that, we'll classify it under operating, investing, or financing. But we required to be disclosed the grant refunded separately. Grant refunded is required to be disclosed separately. Okay. And these are the important items we have relating to the cash flow statement. And cash flow statement simply is nothing but a cash book. But we have to prepare it in the form of this statement by dividing all cash flows in terms of operating, investing, and financing activity. Operating, investing, and financing activity. And simply nothing but, for example, if you observe the balance sheet and profit and loss statement. In case of balance sheet, we have what? Non-current assets like fixed assets and current assets. And here, current liabilities are there, and equity and long-term debt we have. And in this case, transactions relating to the current assets and current liability covered under operating activity. Transactions relating to this covered under what? Operating. Transactions relating to the equity and long-term debt are covered under what? Financing activity. And fixed assets related transactions are covered under what? Investing activity. Investing activity. And in case of trading and profit and loss account, and first of all, trading account related cash flows, if any, covered under what? Operating activity. But in case of P&L items, you need to divide if those are related to the operating, like operating expenses or operating income covered under operating activity. And if any interest paid, we have those are relating to the finance covered under financing activity, and any interest received and dividend received, etc. Those are non-operating income and covered under what? Investing activity. Covered under what? Investing activity. And generally, simply the difference between these statements and cash flow statement is nothing but, and the balance sheet and profit and loss statements are prepared on accrual basis, and the cash flow statement normally prepared on cash basis only. On what? Cash basis only. Okay. It is just we prepared by considering flow of the cash, whether it is relating to the current year or previous year or next year, whatever maybe, whether you receive the cash in the current year or not, whether you pay the cash in the current year or not, that is only the matter we have to consider while preparing the cash flow statement. That's all. Okay. Fine. So some example, we'll see some problems here. So Intelligent Limited, a non-financial company, has the following entries in the bank account. It has sought your advice on treatment for the same for preparing cash flow statement. And loans and advances given to the supplier, is always a operating activity. Even to the employees is also a operating activity. But remember, if any loans and advances given to the subsidiary companies is always a investing activity. Is always a investing activity. And investment made in subsidiary smart limited and dividend received is also a investing activity. And dividend paid is always a financing activity. And TDS. In case of TDS, what income? Interest income. That is a investing activity. And TDS on interest and an advance given to the supplier, that is a operating activity. Any loans and advances given to the supplier and whatever the interest and there are is a operating activity. Operating income related tax is covered under operating activity. Insurance claims, if it is relating to the fixed assets, that is a investing activity. If it is relating to the good, covered under operating activity. Okay. Next, and these are here we cover some important points, and maximum on and average every point is covered in the second problem. So we need to classify the following items into operating, investing, financing, and cash equivalent item. So purchase of machinery is a investing activity, and proceeds from issue of equity share capital is a financing activity. Cash sales is a operating. And proceeds from long-term borrowing. Long-term borrowing is nothing but debt. It is a financing act. Checks collected from trade receivable. Trade receivables are nothing but what? Debtor. Cash collected from debtor is a operating activity. Cash received from trade receivable, operating act, because checks is a cash equivalent item. And trade commission received is a operating activity. Purchase of investment is a investing activity. Redemption of preference share is a financing activity. Cash purchases is a operating activity. Proceeds from sale of investment is a investing activity. Purchase of goodwill is goodwill is intangible asset, investing activity. Cash paid to the supplier is a operating activity. Interim dividend, whether it is a interim dividend or final dividend, it is always a financing activity. And one more thing, wages paid, wages or salaries paid is a operating. Proceeds from sale of patent is intangible asset, so it is covered under investing. Interest received on debentures held as investment. If the debentures held as investment, on the interest we received is covered under what? Investing activity. Nothing but interest received on investment on debentures. And another one, manufacturing overhead is a operating activity. Dividend received on shares held as investment. That is what investing activity. Sorry, that is what investing activity. And rent received on property held as investment property is also what investing activity. Selling and distribution expenses paid, operating. Income tax paid. If nothing was stated, it is operating activity. But income tax paid is relating to operating income covered under operating. Investing income covered under investing. Financing income covered under finance. If nothing was stated, we cover it under operating activity. Dividend paid on preference share, nothing but financing. Underwriting commission. Underwriting commission is relating to the issue of shares or issue of debentures. So it is also a financing activity. Rent paid, if nothing was stated, operating. Sorry, always it is a operating. Brokerage paid on purchase of investment. It is relating to the investment, purchase or sale of investment. So it is covered under what? Investing activity. Bank overdraft. It is like taking of the loan. So that's why it is covered under what? Financing activity. Cash credit is also a financing activity. Short-term deposits. So if its maturity period is less than the 3 months, cash equivalent. Others. So others what? Investing activity. Investing activity. Highly liquid marketable security without risk of change in value. That is what? Cash equivalent item. Refund of income tax received is a operating activity, but refund of income tax received is a nothing but operating activity. Okay, I hope you understood all these points we discussed in the theory. Okay, just go through it. And some 2 points are there. Interest paid on long term borrowing is also a financing activity. Office and administration expenses paid is a operating. Okay, next, how? Third question. Sorry. Okay, coming to the third question. And I will upload this material in the Telegram channel, and just follow that one, and join the Telegram channel. And there, if you have any doubts, then you can ask me in that channel. I will reply. And uh, after watching this video, please press the like button. And also, if you are the new to the channel, and please subscribe it, and also share it to your friends also. Okay. And next, how would the following cash flows are classified in accordance with AS3? And one is corporate income tax paid. Corporating, if nothing was treated, income tax is always treated as a operating activity. Payment of advance tax. 8,75,000, out of which 75,000 was towards capital gain purchase. Capital gain is relating to what? And purchase and sale of the non-current assets or non-current investments, if any. So capital gain taxes, if capital gain is nothing but investing income, investing income. So 75,000 paid towards the capital gain, and it means tax relating to the investing income covered under investing activity. So in 8,75,000, 8 lakh and 75,000. 75,000 is covered under investing, and the remaining 8 lakh, nothing was stated. We consider it as an operating activity only. Fixed deposits withdrawn by customers of the State Bank of India 3. So here we have to think from the point of view of SBI. In case of SBI, fixed deposits and these are all things are covered under what? Operating activity. From the point of view of SBI, we are thinking. Okay? Next. And this is one of the important question. And from the following information, XYZ Limited calculate cash and cash equivalent as on 31st March 2000 as per AS3. And balance as per bank statement and checks issued but not presented in the bank. And here, in case of cash flow statement, you have to consider what cash and cash at bank as per our books of account, not as per passbook or not as per bank. So here the balance is given as per bank statement. And one more thing is one reason is provided, checks issued but not presented for payment in the bank. So from these 2 points you have to prepare BRS and required to ascertain what cash in cash at bank in our books, cash at bank. And here, so balance as per passbook here we consider. What is the amount there? 25,000. In case of passbook, if nothing was stated, that is a credit balance item, nothing but favorable balance. So checks issued but not presented in the bank, nothing but if it is not recorded in the checks issued but not presented is recorded in cash book but not in passbook. In passbook that is not recorded, but in cash book that was recorded there, right? So not recorded in passbook. That's why we recorded. Checks issued is a payment. In case of passbook, payment side is nothing but debit side, and the receipt side is nothing but credit side. So how much? 15,000. So nothing but what is the balance? 10,000. So cash at bank, we have to consider what? 10,000. This is a cash and cash equivalent item. Okay. Short-term investment in liquid equity shares of ABC Limited. Generally, in equity shares, there is a significant risk of change in value. That's why it is not considered as a cash equivalent item. Fixed deposits created on 111 and matured on 15th. 111 means so 11, 12, 1, 2, 3 and a half, 4. It means on and over 5.5 months are there. Nothing but not covered under cash equivalent item. Short-term investment in highly liquid sovereign debt. Sovereign debt means so those are nothing but bonds. Those are nothing but bond. Bonds are not carrying the significant risk. That's why these are covered under what? Cash equivalent item. Mutual funds on so that's sovereign debt means what? Here mutual funds on 1/3/2022 2000x2 having the maturity period of less than 3 months. Okay. And bank balance in foreign currency account in India, $1,000 are there. And we have to consider it on the date of a deposit, nothing. So on the date, prepare on the date of preparing the cash flow statement. And here $1,000 are there. And what is the currency rate on 31st March? 70. And in our term, that is the that value equal to 70,000. Bank balance, nothing but demand deposit. That is also covered under cash equivalent item. Okay. So which items are covered there? So here 10,000 and 10,000, 1 lakh and 70,000. So total 1 lakh 80,000 is covered. Okay. Next, fifth one. Mayuri Limited acquires plant and machinery 25 lakhs, and during the same year it is also sold furniture and fixtures for 4 lakhs. And can the company disclose the net cash outflows towards purchase of fixed assets 21 lakh in the cash flow statement? The answer is no. The answer is what? No. So sale of one asset and purchase of another asset can't be adjusted together. Can't be adjusted. And netting off is not allowed. Netting off is not allowed. The major cash flows relating to the investing, financing activities are required to be shown separately. Netting off is not allowed. Netting off is allowed only in few cases. Only in what few cases? And these are here. Cash flow statement enterprise should report separately major classes of gross cash receipts and gross cash payments arising from investing, financing, except in these two cases. Cash receipts and payments on behalf of the customer, and the cash flow reflect activities of customer rather than those of enterprise. And cash receipts and payments in respect of in which turnover is quick and the amounts are large and the maturities are short. And in the given case, since the purchase of plant and machinery and disposal of furniture and fixture do not fall in criteria of exception, so those are required to be shown separately and not required to be net off. So sale of investment, sorry, sale of PPE is shown as a cash inflow and purchase of furniture and fixture shown as a cash outflow separately and not required to be adjusted. So netting off is not permitted as per AS3. Okay, next. So this is about the basics of the cash flow statement. And then we discuss what is the format. So cash flow statement consisting of what? Three activities, as we said, operating activity, investing activity, and financing activity. And financing activity. And for preparation of the cash flow statement, there are two methods we have. And a direct method and a indirect method. Direct method and indirect method. And direct method we followed when we are able to identify the individual cash flows. Cash flows relating to each and every item is able to identify separately, then better to follow direct method. Otherwise, we follow indirect method. And normally, in case of operating activities only, both direct and indirect methods we can follow. Any one of the method we can follow in case of operating activity. But remember, in case of investing and financing activity, related cash flow can be calculated only by using what direct method. Indirect method is applied only for calculating cash flows relating to the operating activity. But whether you follow the direct method or indirect method, answer be the same. Answer be the same. Then, how to prepare the cash flow statement? So here, cash flow statement for the year ended, and we'll see under what direct method. So first we have to consider cash flows from the operating activities. Cash flows from the operating activity. What are the cash flows we have? Like cash purchases. So cash purchases is a outflow, and the cash sales is a inflow, and cash received from customer is a inflow, and cash paid to supplier is what outflow, and any operating expenses paid is what outflow, is what outflow. So and these we have to consider, and we have to reduce what taxes paid, if any, income tax paid, income tax paid. And remember, any extraordinary items we have to adjust separately. Extraordinary items we have to adjust separately. Best example, insurance claims, insurance received, so loss of goods we have to adjust. So these are any government grant relating to the payment of expenses refunded, that is an extraordinary item covered under operating. So the net cash flows from the operating activity we have to consider. Net cash flows, either inflow or outflow. And this is the first one, operating activity. And second one, cash flows from investing activity we have to mention. Cash flows from investing activity like purchase of PPE or intangible assets like goodwill, patent, trademark, etc. And investments, if any, which is not covered under cash equivalent item. That is a cash flow outflow. And the sale of PPE or intangible asset or investment, again I am repeating, which is not covered under what cash equivalent item. And interest received, if any, and dividend received, if any, dividend received, if any, we have to consider all these items. And adjustment of what extraordinary item. Extraordinary items are always required to be disclosed separately, either cash inflow or cash outflow. Then we have to show net cash flows from investing activities. Net cash flows from investing activities. Even any loans given to the outsider, any loans given to the subsidiary company, investment in subsidiary company, and so grants received for purchase of plant and machinery or any intangible assets, and these are all covered under what investing activity. We have to consider here. And another one is cash flows from financing activity. Cash flows from what financing act like proceeds from issue of shares, debentures, bonds, etc. That is a inflow towards nothing but capital received. Even capital received in case of sole trader. So that is covered under inflow. And redemption of shares or debentures or bonds, that is a outflow. And of equity shares, buyback of what equity shares, and repayment of loans, if any, and loans taken is a inflow. And dividend paid. And remember, whether it is a final dividend or interim dividend, we have to consider here outflow. And interest paid, if any, that is what outflow. And any grant received towards the capital contribution, promoters contribution, and these all things, and these are all covered under what net cash flows from the financing activities. Okay. And here we discuss, in A we calculated cash flows from operating, B cash flows from investing, C cash flows from financing, and the total. So net cash flows during the year, net cash flows during the year, we have to add what opening balance of cash and the cash equivalent to this. Then we'll get what closing balance of cash and cash equivalent item. And it simply is nothing but it is a reconciliation statement we prepared by consolidate by tallying what opening balance of cash and cash equivalent with the closing balance of cash and cash equivalent. Okay. So this is the format of the cash flow statement under which method? Direct method. But remember, only the variation relating to the direct and indirect method is nothing but the presentation of the cash flows from operating activity. If you able to identify the individual cash flows relating to the operating activity, follow the direct method. Otherwise, we follow the indirect method. And it means if for profit and loss statement, profit before tax and balance sheets are only given and clearly mentioned to follow the indirect method only, then we follow the indirect method. Okay. Then, and also we'll discuss indirect method, cash flows from operating activities in relation to what indirect method. And as we discussed, in case of the balance sheet, in case of the profit and loss statement, which items are covered under operating activity? Here, current assets and current liability only covered. And simply the difference is nothing but working capital. And in case of P&L, and we have the sales. And in case of here, operating expenses and operating incomes, if any, these are only, and means here, uh, purchases, cost of goods sold here. So these are all what operating activities. But in case of indirect method, we start with what? Profit before tax. We start with what? Profit before tax. So profit before tax. We start with profit before tax and just assume the profit and loss statements. In P&L statement, we have the gross profit here. And in this case, operating incomes we have operating income and non-operating income and non-cash incomes also there. Non-operating income are nothing but what? Operating income is relating to the rent received. Rent received. If it is a investment property, that is the non-operating income. That is non-operating income. And non-operating income best example is interest income received, dividend income received. Operating income best example commission received. And non-cash incomes like discount received. Discount received. Okay. And here on the debit side, we consider expenses like operating expenses and non-operating expenses like interest paid and another one non-cash expenses like loss on sale of asset or loss on sale of investment or depreciation amortization etc. And we consider what tax paid and this is what net profit. But here we start with profit before tax. Profit before tax means net profit plus tax. Net profit plus tax. So profit before tax. And here we have to consider only this part. Only this part. Operating income and operating expenses and gross profit related part. And these all are required to be added, adjusted back. If those are reduced, then we have to add back. If those are added, we have to reduce it. Nothing but non-operating non-operating expenses. We have to add it back like interest expense. Remember, we have to consider expense, interest expense, not the interest paid. Small difference is that interest expense is nothing but what paid and payable. In P&L, we follow the accrual concept. There we consider paid and payable. But in case of financing activity, while considering the interest, we consider only interest paid. Only interest paid. And another one, non-cash expenses. We have to add it back like depreciation, amortization, if any, and another one loss on sale of investment or PPE or intangible assets we have, and those are required to be added back. Those are required to be added back. And another one, non-cash income, if any, we have to reduce because that was already added. So like discount received and non-operating income. So we have to reduce like interest or dividend income or rent in case of investment property. Rent received in case of investment property, that is a non-operating income. Okay. And then we have. And from this, we have to pay what? Tax paid. We have to pay what? Tax pay. And this is about what? P&L item. But operating activities covers not only the P&L, balance sheet items are also covered. And in balance sheet, it covers only current assets and current liability related matters. Nothing but it covered under what? It covers only working capital related matter. You have to verify whether working capital, when compared with the previous year, working capital increases or decreases. So, if any adjustment under working capital changes, working capital changes. So, if current assets, what are the possibilities we have? Current asset increases, current assets decreases, and current liability increases, and current liability decreases. Okay, and remember, but while preparing this, while considering this, current assets means current assets means like inventory and debtors and uh, trade means bills receivable and other receivables if any, except cash and bank and cash equivalent items if any, except cash and bank and cash equivalent items if any, these are not covered. And one more thing is, in current liability we have to consider trade payables and trade payables and other outstanding expenses if any, outstanding expenses if any, we have to consider, except provision for tax and proposed dividend, except provision for tax and proposed, because in case of provision for tax and proposed dividend we consider those items individually. So in case of tax payment, so uh, at the top, while calculating the profit before tax, the provision for tax was added to the net profit, then only we get the profit before tax here. The provision for tax added back here. And tax payment is considered here. Generally, two transactions only we have. And we are considering the transactions on individual basis. Each and every transaction we consider. That's why not required again to consider in working capital changes. Okay. And if you consider, it will become double. And even interest related, outstanding interest if any, and any interest receivable, those are also not required to be considered, because those are the matters relating to the investing or financing activity. Okay. And here, coming to the current assets increases, if current asset increases means, so you have to think only one point from the cash and cash equivalent point of view. If current asset increases means what? We invested the amount in the current asset, our amount is blocked there, our amount is blocked there, and that is treated as what? Deemed to be outflow. Deemed to be outflow. And if the current asset decreases, means our asset withdrawn from the current assets into the in the form of cash. So means what? There is a release of the current asset, release of the working capital, and is it, sorry, it is treated as what? Inflow. Treated as what? Inflow. And another one, current liability increases. Current liability increases. Current liability increases means we are paying the liability, right? We are paying the liability. So, sorry. Current liability increase. Current liability increases means what? So, current liability increases means what? We are purchasing the goods. For example, we purchase the goods on credit basis. We purchase the goods on credit basis. So here creditor balance is increased. And without paying the amount towards the purchases, we block our cash. We block our cash. So in that case, we retain our cash and is deemed to be what? Inflow to us. Deemed to be what? Inflow to us. If current liability decreases, means we are paying the liability. We are paying the liability. So it is treated as what? Outflow. And this is treated as what? Net cash flows from operating activity. Net cash flows from operating activity. So here in case of indirect method, we consider what? Profit before tax and non-operating expenses, non-operating income, non-cash expenses, non-cash income are required to be adjusted separately. Okay. revert back, and we consider tax payment. Next, working capital changes. Simply, we increase in working capital. If working capital increases means what? Either current assets increase or current liability decrease. That is the increase in working capital. If working capital increases means we invest the our amount in the working capital, and if our amount is blocked there, deemed to be outflow. Decrease in working capital means current assets decreases or current liability increases. Our amount withdrawn from the working capital, our amount released from the working capital, and is deemed to be what? Inflow to us. Okay, so these are the two methods relating to the direct method cash flow statement and indirect method. But indirect method or direct method, cash flow from investing act to financing activity, both are same. Only direct or indirect varies in case of cash flows from operating activity. The way of calculating the amount of cash flows from operating activity is different, but in case of direct method or indirect method, the net cash flows from the operating activity be the same. There is no change. Okay. And one more important point is, so for example, so profit before tax is not given in the problem. How to calculate? How to calculate? In case of profit before tax is not given, then we have to consider we have to calculate it from the balance sheet. So, and then nothing but what? So first of all, if you have the P&L and extension to the P&L, nothing but what? So nothing but what? Profit and loss appropriation. Extension to P&L concept. For example, profit before tax is there. What are the appropriations what are the payments or appropriations? Anything we have. First we pay the tax provisions we have. And any amount transferred to reserves if any amount transferred to reserve, and any amount paid towards what? Dividend if any amounts paid towards dividend if and these are general appropriations we have, and that is the remaining amount we have in balance sheet, which is transferred to balance sheet. So based on this, profit before tax is calculated in the reverse pattern. What is the increase in profit and loss account when compared with last year? Whatever the increases are there, plus and increase in general reserve if any, and but verify sometimes there is a decrease in general reserve by transferring to CRR also, just verify it once. And any proposed dividend for current year anything we proposed, that is added back. And provision for tax for the current year. This is what profit before tax we have to consider. Profit before tax. Okay. And one more important point is, for example, relating to the uh, tax provisions, relating to tax provision, we have only current year and the previous year data, and the provision for tax was given. Simply, only this data only given in the problem. In this case, consider previous year is treated as tax payment and current year is treated as provision for tax. This is the current year provision. Current year amount is treated as current year provision. Last year amount generally we paid in what? Current year only. That is treated as tax payment. That is treated as what? Tax payment. And in addition to that, like, so for example, current year and the previous year data, provision for tax was given. Provision for tax was given. And along with that, some additional point. So what is the tax provision for current year or tax payment during the year? Tax payment during the year. In this case, and better to prepare provision for tax account. Provision for tax account. And first we consider what? Opening balance and closing balance. And by profit and loss account, nothing but current year any provision we created, and to cash or bank, nothing but any amount we paid. So if any additional data along with the opening and closing balances, any additional data we have, better to prepare what? Provision for tax account. Okay. And one more thing is we have provision for tax current year and the previous year on liability side. On asset side, we have the advance tax. On asset side, we have the advance tax. In that case, and you may prepare a single account. So, like tax account, tax expense account, and provision for tax opening balance and advance tax opening balance is generally debit side. And provision for tax closing balance and what is the current year provision and to cash balance. Anything, any one of them is the balancing figure. Or you may prepare provision for tax account or advance tax account separately. Anything, provision for tax account or advance tax account separately. Okay. And one more important point is, for example, in the given case, if the same point we have relating to the proposed dividend, proposed dividend we have. So then in this case, this is nothing but we consider it as what dividend paid in current year. Whatever the dividend relating to the last year is assumed to be paid in current year, or current year amount is treated as dividend dividend proposed in current year. Dividend proposed in current, and it means in the indirect method while calculating profit before tax, this will be added to the net profit if any we want. Okay, this is considered as a financing activity. Okay, and these are the small things we have to remember while preparing the cash flow statement. Okay, then coming to the problems. And here, prepare the cash flow statement of MNT Limited for the year ended 31st March 2000 X1, and with the help of the following information. Company sold goods for cash only, and gross profit ratio 30% for the year, and GP amount is 3,82,500. Generally, GP ratio is equal to what is the formula? Gross profit by sales into 100. Then sales equal to what? Gross profit by GP ratio. Nothing but 3,82,500 by 30%. We will get what? Sales. So 3,82,500 by 30% means 0.3. Nothing but 12 lakh 75,000, right? 12 lakh 75,000 is what? So sales. All sales are on what basis? Cash basis. So cash sales are covered under what? Operating activity. Okay, under operating activity. Next. And wages paid. So wages paid is a operating activity. And one more point here given, opening inventory was lesser than the closing inventory. And we'll see. And office and selling expenses paid. This is also operating activity. Dividend paid. This is what? Always a financing activity. Bank loan repaid. 2,15,000. And out of that 2 lakh is the loan, and in 15,000 is the interest. Both are what? Financing activity only. Trade payable and on 31st March 2000 X0 exceeds balance on 31st March X1 by 25,000. So when compared with the closing balance, when compared with the closing balance, opening balance is okay. Trade payable on 31st March X0 exceed the balance on 31st March X1 by 25,000. Amount paid to trade payable and the amount paid towards the creditor is a operating act. Tax paid during the year. This is what operating act, but provision for tax is not considered under direct method. And but in case of indirect method, it is required to be added back to the net profit if you want provision for tax. Sorry, profit before tax. Investment 7 lakh sold during the year at profit of 7 lakh 20,000. Nothing but 7 lakh 20,000 is a investing activity. Depreciation is a non-cash transaction. Plant and machinery purchased. This is a investing activity. Okay, then we'll see which method we followed. They follow what? Direct method. So cash sales, and we computed cash payment to the creditor, and we consider wages paid, office and selling, and minus tax paid. And investing law, we have sale of investment 7 lakh 20, payment to purchase of plant and machinery. And in case of financing, loan repayment, including interest, dividend paid. And opening balance will add it. Then we get what closing balance. Okay. Next. Hmm. Okay. The seventh problem. And Rayan Limited provides you the following information at the year ended 31st March 2000 next one. Sales and cost of goods sold, operating expenses including depreciation, nothing but non-cash expenses. Other incomes we have interest expense paid, interest income received, gain on sale of investment, loss on sale of plant is the income tax. And coming to the balance sheet data was given. And here analysis of selected accounts and the transaction during the year and purchased investment. This is what investing activity. Sale of investment. This is also what investing activity. And these investment cost is 90,000. Nothing but 1 lakh 2,000 sale price, but 90,000. Cost is the 90,000. Nothing but 12,000 is the profit on sale of investment. Profit on sale of investment. And we have to consider it in what? So, cash flows from operating activity under indirect method, we need to adjust it, revert back. So while calculating profit before tax, so while calculating cash flows from operating activity and purchase of plant asset, this that is also investing. Sale of plant is also investing activity. But accumulated depreciation 2000 means 10,000 minus 2000. 8,000 is the book value, and we sold it for 5,000, and then 3,000 is what loss. Loss is a non-cash item. Is required to be considered in cash flows from operating activity under indirect method. Issue 1 lakh bonds at face value in exchange of plant and machinery. So this is a non-cash transaction because no cash is involved in the transaction. Repaid 50,000 of bonds at face value of at maturity. This is a financing activity. Issued 15,000 shares. So this is a financing act. Cash dividend paid is also financing activity. We have to prepare cash flow statement under indirect method. In case of indirect method, what we do? We start with what? Profit before tax. Nothing but what? 23,000. Okay, so 23,000. And first, we have to add back what non-cash expenses like depreciation is there, loss on sale of asset is there. So depreciation we have to add it back, and loss on sale of asset we have to add it back. And the second one, non-operating income effect. Sorry, non-operating expenses effect. Non-operating expenses here is nothing but interest expense we have that is added back, and non-operating income like interest income and profit on sale of investment and non-cash income, but non-cash incomes are not that, that's why not considered. And after that we have to consider current assets and current liability, but here current assets changes we have to consider inventory, trade receivables only, and prepaid expense, cash is not considered. So here coming to this, so when compared with the last year there is a increase in inventory, and here in case of trade receivable decrease, and in case of prepaid expenses decrease. Increase in inventory is a outflow, and decrease is a inflow. Okay, and same way we consider it in case of current liability. Current liabilities are nothing but what trade payables we have, outstanding liability. These two we have to consider. So 43,000 minus 50 increase is there. Increase is a inflow, and 9 to 12. This is also inflow. So those are considered. Income tax payable and cash is not considered. Okay. Then we have what 56,000 income tax paid. Then cash flows from operating activity. And coming to the investing act, we have the purchase of land, sale of land, purchase of investment, sale of investment, interest received also there. Directly we consider. And coming to the shares, so coming to the financing activity, in case of financing activity, source of finance we have to consider like share capital, reserves and surplus bonds, and share capital. How much increase is there? So 4,65,000 minus 3,15,000, 1,50,000. But remember, and one non-cash transaction we have. If sorry, this is relating to the bonds. Okay. How much? 1,50,000 is 1,50,000 increase. Proceeds from issue of shares. Proceeds from issue of shares. 1,50,000. And one more point is relating to the bonds. And there is a bonds of how much? 2,95,000 minus 2,45,000 increases. 50,000 increase. But that 50,000 increase is relating to what? Issue of 1 lakh bonds at face value in exchange of the plant and machinery. And 1 lakh bonds are issued during the year. 1 lakh bonds are issued during the year. So nothing but what? If the bonds account we open and opening balance is 2,45,000 and the closing balance is 2,95,000. 2,95,000. And during the year, 1 lakh worth of the bonds are issued. So, and the bond means what? Plant and machinery account debited to bonds, 1 lakh. Plant and machinery to bond, 1 lakh. No, so 2,45,000 plus 1 lakh minus 2,95,000, and some difference is there. How much amount? 50,000. And that 50,000 is nothing but what? Repayment of bonds. Nothing but what? Repayment of bonds. And we have to consider that one here. And repayment of the bonds is how much? 50,000. And interest paid, dividend paid, we have to consider. And opening balance is added, we get the closing balance. Okay. So, indirect method simply, so just remember the format, follow the steps. So easily we can get, okay? And prepare the cash flows of Gamma Limited for the year ended from the following information. So, sale for the year amounted to 135 crore out of 60% were cash sales. So, cash sales are nothing but what? So, 135 into 60%, sorry, 81 crore. 81 crore. Purchases for the year amounted to 55. Sorry, remaining are what? Credit basis. 135, 81. And purchases for the year amounted to 55 crore, out of which credit was 80%. Means what? Cash was 20%. So 55 into point 11. So cash purchases are 11. Credit are nothing but 55 minus 11, 44. Administration selling expenses amounted 18 crore, salaries amounted 22 crore. These are paid. So operating activity. So cash items are covered under first three operating. Company redeemed debentures of 20 crore at premium of 10%. Nothing but 20 plus 10% premium, 22 crore. And this is what in financing activity. Debenture holder were issued equity shares of 15 crore towards the redemption. As a part of the redemption, 15 crore worth of the equity shares are issued to the debenture holder, and this is a non-cash transaction. And balance was paid in cash. Balance was paid in cash. So what is the balance? We have to total 22 crore are there. So sorry, 20 crore. 20 crore out of 20, 15 crore are issued in terms of equity share, and the remaining 5 crore only paid in cash. And the debenture interest paid during their 1.5 crore is a financing activity. Dividend paid is a financing activity. Investment costing was sold at a profit of 2.4. Nothing but 14.4 crore is the investing activity. 8 crore paid towards income tax. That is a ordinary operating activity. New plant costing 21 crore purchased in part exchange of old plant. Part exchange of old plant. Book value of old plant is 12 crore. Means 21 minus 12, 9 crore. 9 crore is the cash flow activity. Sorry. 12 crore worth, we consider the book value 10 crore only. We consider the book value of 12 crore, but vendor took over the plant at 10 crore only. So nothing but 11 crore we paid in cash. 11 crore. So this is 11 crore is a investing activity. And following balances we have. What are the balances? Debtors and creditors back. And this is a cash flow transaction, cash flow item, cash equivalent item. And debtor, if you prepare the debtor account, we get cash collected from debtors. If you prepare the creditor account, we get cash paid to the creditor. Okay, based on that. So here, cash sales, cash received from debtors. By preparing the debtor account, we get this one, cash purchases, cash payment to the supplier. And by preparing the creditor account, we get this one, cash paid to employee salaries, office and administration expenses, income tax paid. Sale of investment we have, payment towards purchase, only 11 crores, part of the payment. 10 crore is the old asset value, they consider. Financing act with redemption of debentures, 7 crore we paid in cash. Okay. Actually, out of the 20, 15 crore is there. Plus, so, plus premium, how much? 20 crore into 10% premium is there, 2 crore. Total 7 crore we paid in cash. And interest paid. So 1.5 dividend paid, and net cash flows, net increase in cash, and the opening balance we have added, and then we get closing balance. Okay, next. And this is one of the different problem relating to the especially capital point is important. From the following information of Mr. Jen, prepare cash flow statement as per AS3 and for the year ended 31st March. And ledger balances we have. And additional information, a machinery costing 80,000, accumulated depreciation there on 24,000 was sold for 40,000. So 80,000 cost, 24,000 means around 60, 56,000 is the book value. We sold it for 40,000. So loss is how much? 16,000 loss is there. Provision for depreciation. Provision for depreciation is how much? 2 lakh. On 31st month, 3 lakh. Net profit for the year. Net profit means after payment of tax. So we have to add it. And we have, in case of indirect method, and in this case, we have to prepare the cash flow statement for the year, but only ledger balances are provided relating to the balance sheet. So that's why we follow the indirect method. Okay. Indirect method. In case of indirect method, we start with what? Profit before tax operating activity. But only net profits we have. In case of net profit. So net profit is equal to 3,60,000. 3,60,000. And provision for taxes are not provided here. So ignore it. And loss on sale of asset is how much? 16,000. We have to add it back. And depreciation. How much amount is that? 1 lakh 20,000 we have. 1 lakh 20,000. Correct? Depreciation is how much? 1 lakh 20,000. And one more point is on the sale portion, 24,000 amount is there. And total, so 3 lakh 20 minus 2 lakh plus 24,000 accumulated depreciation here. So total 1 lakh 44,000. If you added back, then we get profit. So net cash flows from operating activity before adjustment of working capital. And here the working capital changes are there. Opening inventory changes, trade receivables and trade payable. This is not important, but here the most important point is relating to the financing activity. So financing activity, cash flows from financing activity. But here, if you observe, Jet's capital, when compared with the last year, there is an increase of what 2,24,000. But don't consider it as a capital brought by the owner. So if you consider it as capital brought by the owner, it is an inflow. But this is wrong. Because in case of a sole trader, current year profit is added to the capital part. Current year profit. Then we need to prepare capital account. Opening balance is 10 lakhs and closing balance is 12 lakh 24,000 and net profit we have during the year 3 lakh 60,000 we have 3 lakh 60,000, nothing but 10 lakhs plus 3 lakh 60,000 minus 12 lakh 24,000, 1 lakh 36,000 amount of capital was withdrawn by the party, nothing but outflow. 1 lakh 36,000 was withdrawn by the party. That is what outflow, nothing but drawings. Nothing but what drawings. Okay. And remaining points are very easy and all points only this is the crucial point in this problem. Okay. So if you observe balance sheet directly and you consider it as there is an increase in capital, we consider it as a proceeds from the capital brought by the owner and we treated it as inflow. But without preparing capital account, you can't say because in sole trading concern, current year profit is also added to the capital. Okay, that is the important point. Hmm. And here coming to the next problem, an amount. So summarize the balance sheet of Magenta Limited. We have, and we have the balance sheet, assets and liabilities. We have, and the depreciation. These are the non-cash expenses, income tax paid, and dividend paid. Cash flows from operating activity. In this case, better to follow what indirect method. Only balance sheet data is provided. In case first provision for tax is given, and here in the below the balance sheet, income tax payment was given. We have to prepare what provision for tax account. What is the opening balance? We have provision for tax and 2 lakhs and the closing balance 2 lakh 50,000. So 2 lakh is the opening balance, 2 lakh 50,000 closing balance. Tax paid during the year, provision for tax to cash 1.75, and the difference is the current year provision. So 2 lakh 50 plus 1 lakh 75 minus 2 lakhs. So 2,25,000 is the tax provision for current year. Tax provision. Okay. Fine. Another one. So in case of indirect method, we start with profit before tax, but profit before tax was not given. In case of profit before tax was not given, what we have to consider first, increase in profit. Increase in profit. How much amount of increase is there? So 90,000, 1 lakh 50 to 2 lakh what 90. There is an increase in general reserve. How much? How much? 2 lakh. Sorry, 1 lakh 90,000 and proposed dividend. Proposed dividend. And there is no dividend we have. Current year there is no dividend. And another one is uh, provision for tax we have to add. Provision for tax we computed as what 2,25,000 we have to add it. 2 lakh. So 90,000 plus 1 lakh 90 plus 2 lakh 25. So how much amount is there? 5 lakh 5,000. So these three. So 90,000, 1 lakh 90 and provision for sorry already provision for tax was provision for tax we have to add it here. So provision for tax added here and sorry interim dividend we have interim dividend is also required to be added 1 lakh. Okay. And remain non-cash expenses, depreciation, we have to add it back. So then depreciation. And there is a good intangible asset. If you observe the intangible asset, there is a decrease. How much amount? 1 lakh. And is it treated as write-off of goodwill, is a non-cash expenses. And the remaining adjustment of working capital changes. And income tax paid already we compute, already given in the problem 1,75,000. Okay. This is cash flows from operating activity. That was the question asked. Cash flows from operating activity only. This is the provision for tax account. Provision for tax. And in this case, we assumed that there is no preference. If nothing was stated, just consider no preference dividend paid during the year. If you consider preference dividend, you may assume that preference dividend paid. And you need to add back what preference dividend also. Preference dividend. Okay. Next. And the last problem. And the balance sheet of Moon Limited. So, sorry, balance sheet of Moon Limited, 31st March 25, 31st March 24, we have. And in notes to accounts, we have the points. Further information, we have profit before tax was given directly. So, tax expense during the year, and it includes deferred tax liability also. This is important point we have. This is important point. And this is the new one we have in this problem. And depreciation charged on furniture and fixtures is the old general point. And one old furniture item was sold 17,000 and profit on such a disposal amounting to 8,000. That means that sale is for 25,000. Sale of investment, sale of asset. So we start with what profit before tax. How much amount is the 45,000? And depreciation we have to add it back. How much amount? 35,000 is that. And another one, pro profit on sale of investment is a non-operating income we have to reduce. Profit on sale of investment. How much amount is there? 8,000. We have to reduce. And then coming to the other, there is no long-term debt for considering the interest payments, etc. And goodwill is not, intangible assets are not there. If any write-off of intangible assets we have not required to consider. And directly, this is what. So before changing working capital changes are adjusted we have. And this is important point 4,000 income tax paid. How we get 4,000? And first we have to prepare provision for tax. And what is the opening balance we have provision for tax? Uh, so here 10,000, 10,000, 15,000. Opening balance here is 10,000 and closing balance is what 15,000. And current year tax expense. Current year tax expense. Nothing but what provision for tax. How much is there? 15,000. Provision for tax 15,000. And generally, two cash we consider. But the total amount we not paid during the year. Out of that, some payment will be deferred to the subsequent period. So to DTL, we have to transfer to what? DTL, deferred tax liability. Deferred tax liability is how much? 6,000. Deferred tax liability is over 6,000. And the remaining amount, sorry, remaining amount 10,000 plus 15,000 minus 15,000 minus 10,000. Sorry, minus 6,000. Sorry, 4,000. Minus 6,400. This is the tax paid during the actual. This is the total amount of tax we required to pay. But the total amount not paid during the year. Out of that, 4,000 is deferred to the 6,000 deferred to the next year. That's why we transfer to DTF. And the remaining 4,000 we paid during the year. Okay, and that is the important point we have, and the remaining all points are same. And this is the exam problem. Okay, recent exam problem. Okay, this is what cash flow statement. And while preparing the cash flow statement, and remember, non-cash expenses are not considered. Non-cash expenses like asset purchased by issue of shares, asset purchased by issue of debentures, etc. Those are not considered. Okay. This is simply nothing but what cash flow statement. I hope all points are covered. I hope you enjoy the video. And if you are new to the my channel, please subscribe it. And if you watch the entire video and press the like button, also share to your friends. And also please mention your comment below the video. So if you have any doubts, or else you may join my Telegram channel, through that you may reach us. Okay. Thank you. And these notes I will upload it in Telegram channel. Thank you. Take care. Bye bye.